one of the things that I wanted to make sure that we could actually talk about that I've heard about IRA accounts, especially for those who are investing in real estate. Of course, there's the UBIT
Yep.
tax. Maybe you can unpack that a little bit for people so that they can have a little bit more understanding about what that is and what to watch out for.
For sure, yeah. So it's called UBIT tax, stands for Unrelated Business Income Tax. If I have a self-directed IRA and then I have money in my self-directed IRA, if I leverage that IRA, like we have certain loans out there, they're called non-recourse loans. We work with different non-recourse lenders that will lend to IRAs, for example. That would ultimately cause my IRA to incur UBIT tax. So it's on the debt leverage side of the deal. So like, let's say it's 20% down and 80% of the purchase was loaned, then 80% of that transaction moving forward, 80% of the proceeds would be exposed to UBIT taxes. So basically there are four different brackets for UBIT tax. The highest being anything above 12,500 in profit is in the maximum UBIT tax tier, which is 38.5%, which is pretty high. Now, there are various deductions that we take to offset that UBIT tax, such as interest expenses, repairs, maintenance. There's about 7 categories that we can use to take off that UBIT tax, but that ultimately would apply for a self-directed IRA on its face.